Welcome back, traders. Today we are talking about a unique strategy centered around Alteria, a ticker symbol MA. That's a dividend stock that has caught our attention. Now, dividend stocks are beloved by investors seeking stability and income in their portfolio. And Alteria is known for its consistent dividend payouts, making it a favorable among income investors. But what if I told you there is a way to enhance your returns with options while still enjoying those juicy dividends? Let's break it. Before we jump into the strategy, let's quickly review Alteria's dividend history. Go to Google and just search for MO dividend history. The first link will be the nasdaq.com. Click on that. If you look at the summary of this particular stock, this is under healthcare vertical, and if you look at the dividend history, every quarter they pay you 98 cents, which is increasing from 86 cents to 98. So there is some growth in the dividend. As you can see here, Alteria has a solid track record of paying dividends, offering stability to its shareholders. Alteria provides investors with a stream of passive income, approximately $392 per annum, which is around 9.53%. Now let's move on to the exciting part, which is the strategy. Here is what we are proposing. Buy 100 stocks of Alteria and simultaneously purchase a put option that expires 2 years out at the same price or a higher price. For example, if we buy the stock at 41.15 and 2 years out, that's the last one, 16th of Jan 2026, if we go there, either we can buy a put at 42.5, which is higher than our purchase price, or we can go on the lower side. Now you might be wondering, why would we want to do this? Let me explain. By purchasing a stock and a put option together, we are essentially creating a form of insurance for our investment. If the stock price were to decline, the put option provides us with the right to sell our shares at the strike price, thus protecting our downside risk. And Alteria dividends can help offset the cost of purchasing the put option upfront. As you know, currently Alteria annual dividend is at around $3.92, which is around $3.92. So for every 100 stocks we own, we are expecting $3.92 in annual dividend income. This dividend income can help mitigate the cost of our put option, making this strategy more efficient in the long run. Now look at the risk analysis. We bought this stock at 41.15. Again, these prices may change when tomorrow morning market will be open, but at least at this moment it's around 41.50, and we will buy a put at the strike 42.50 for $6.50. So our maximum loss is $515. If the stock falls to $9, $20 to $30, it doesn't matter. We are losing $515. That's the maximum loss. But look at the upside potential. If the stock, let me go here to today first. If the stock rises, you will be able to get good amount of profit, still protecting your losses. By employing this strategy, we are not only protecting our downside risk, but also positioning ourselves for the potential upside gain. If Alteria's stock prices were to rise, we can continue to collect dividends while enjoying capital appreciation on our shares. For example, let's assume that you want to sell this stock by December end, after getting the dividend for 4 quarters, and on 31st of December 2024, if the stock is above $44.05, by this time you receive the premium for 4 quarters, which is almost around $392. And if the stock is at $44, your loss is only 35 cents. But if the stock is at, let's say, at 46.2, your profit at that time is 133 plus 392, so almost around $520, something like that. So that's the beauty of this particular strategy. Let me explain you all this with the help of the calculation. So let's say you purchase the stock on 226 at 41.50, and immediately you buy a put 2 years out, expiration date for 42.5 strike at 650. So your total investment is 41.15. You bought the strike at 650. So if you look at the difference between the stock buy price and the put strike, 42.5 minus 41.15, you are getting additional $135. So effectively you are selling this stock at the expiration at $36, which is in loss because you paid 41.15 and you are only getting 3600, right? So maximum loss is 515. But here is the dividend part. You have received almost $784 in the dividend. So if you consider that the premium received for 8 quarters, which is 784, your total profit is around $269. So you are not losing a single penny over here. Still you are protected. If the MO goes down for any reason during the earnings or anything like that, you will be able to make 269 if you keep the stock till January 16, 2026. So to sum it up, with the combination of dividends and options, we have a strategy that offers downside protection, income generation, and potential for capital appreciation. It's a win-win-win scenario for a savvy investor looking for maximizing the returns with Alteria stock. As always, remember to do your own research and consult with the financial advisor before making any investment decision. If you find this video valuable, remember to like, share and subscribe for more innovative trading insights. Until next time, happy trading.